put your love, love, put your love glasses on, glasses on. Put your love, 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 put your love, love, put your love glasses on. I see you looking like you wanna dance, and I'm watching, wondering why you don't take a chance. Just go ahead, take his hand. What you scared of, man? What you scared of, man? You know you got it in you, now just let it out. Don't miss this moment, this is what it's all about. It's everywhere, look around. So many treasures to be found. So we gotta keep truth seeking, listen to wisdom speaking. Catch his heart beating and bye.
These sectors have become very attractive due to the AI, artificial intelligence revolution. And most of these innovations are happening in the US. And then, of course, you talk of the Magnificent Seven, the Teslas of this world, Microsoft, Amazon, Apple, Nvidia. These are some of the best performing companies around the world today. Then outside of the US, you have a lot of companies that are doing well. Healthcare companies in Denmark. You have semiconductor hardware manufacturers in Holland, in Asia, Taiwan, China, and Japan. Then you have luxury good manufacturers in France and the likes. And then, of course, you have the companies that are classified as dividend aristocrats. So these are some of the teams that you may consider if you're looking to invest internationally. Here are some of the major exchanges and key indexes around the world. You have the New York Stock Exchange, the largest exchange in the world, and the S&P 500 and the Dow Jones Index tracks the performance of this market. Then I'm sure a lot of people will be wondering how to go about investing internationally. And I must warn that if you're investing from Nigeria, it's very, very difficult investing in international stocks. The simple reason is that the major brokers, which we have highlighted here, Fidelity Investment, Charles Schwab, Interactive Brokers, Robinhood, Vanguard, most of these brokers would not open an account for you if you do not have a social security number. They won't open an account for you. In fact, for some of them, once your IP address reflects that you are accessing their site from Nigeria, they sign you out automatically. The only broker that we've identified that is able to open account for people who live in Nigeria is called Questrade. Questrade is a Canadian brokerage firm. It takes on the average about a month to get through to opening the account, but eventually they'll create an account for you. This is the only brokerage firm we have identified to be able to open an account for people investing from Nigeria. Because of the difficulty of opening brokerage accounts directly in the US, a couple of technology companies have obtained what SEC classifies as sub-broker digital licenses. And they're using this to give access to Nigerians, mostly retail investors, to invest internationally. Okay, I should have said this at the beginning. Please, this is extremely important. Nothing I say here should be taken as an investment advice. Investing is one of the most important decisions you ever make in life. And it makes sense that you do not take everything you hear into account when you are making investment decision without running it through a professional who will help you personalize those insights and information. So it's always best to run this through a professional before you put them to use. So as a disclaimer, no one should go ahead and use any of these platform strategies without running them through a broker, through an investment advisor, a licensed one at that. Personally, I do not use any of the digital platforms in Nigeria. The one I use is Questrade. That is the platform I use personally for my investments. So I'm not advising anyone to use any of them. You need to run it by a professional before you put them to use. The US market opens by 9:30 a.m. and closes by 4 p.m. EST. In Nigeria time, that is 2:30 p.m. to 9 p.m. But there are trades and transactions that occur outside of those markets. After market close, which is by 9 p.m., the market trades for 4 more hours in post-market trades. And then pre-market from 4 a.m. US time to 9:30 a.m. US time, the market trades. But what you should note with these pre-trading and post-trading opportunities is that there are less participants at that point in the market, and they don't trade on the exchange. Actually, its trades are done through electronic crossing. Then when it comes to investing domestically in Nigeria, I guess I need to speed this up now because we still have some way to go. When it comes to investing in the Nigerian market, there are 2 pillars I consider because of the issues, the macroeconomic instability that I have enumerated initially. Investing in Nigeria can be tough, especially in the stock market. Returns can be inconsistent. So for me, I like to look at investing in the Nigerian market from 2 lenses. One, having a core portfolio. This core portfolio consists of stable companies that are market leaders and are resilient enough to weather these storms of macroeconomic instability. What we do is we have 70 to 80% allocation to these core asset portfolios, and then you have a satellite portfolio that invests the balance. Now, with this satellite portfolio, you can now decide to be opportunistic in seeking high companies that are capable of offering you very high returns. Again, this is not an investment advice. Run this by a professional before you put it to use. So most of what I'm saying is for illustration purpose. The way we go about selecting stocks is that, like, we favor companies that have high consistent dividend growth, have healthy return on assets and healthy return on equity. I like companies that have high level of free cash flow. It means that they can take advantage of new opportunities as they arise. Companies that have less borrowing on their balance sheets, and companies that are not very volatile in the market. So these are the sort of companies that we favor. And I encourage us to consider this in seeking companies that have high sound fundamentals. Then moving ahead, let's get into bonds. As I did say earlier on, you can look at assets as stocks and bonds. But when it comes to this, I like to break them down again. For bonds, I like to break down fixed income investment into bonds, euro bonds, domestic bonds, and treasury bills. Now, because of the high level of devaluation of the local currency, a lot of investors have resorted to investing in euro bonds to minimize and mitigate the currency risk that comes from having exposure to just Naira assets. Now, some of the benefits of investing in euro bonds is that when you're investing in sovereign euro bonds, that is bonds issued by governments, they are typically tax exempt, and you are not subject to paying tax like withholding tax and VAT on such investments. Then, of course, currency devaluation, and bonds typically pay coupons, which is paid mostly semi-annually, twice in a year. This gives you access to steady stream of income. Yeah. But one warning note is that when you invest in euro bonds, it comes with a higher level of risk, because if the federal government borrows through bonds, treasury bills, and euro bonds. If the government runs into trouble, Worst case scenario, they can raise taxes to meet their obligations, or worst case scenario, print money. But if the government has borrowed in a foreign currency, they can't raise tax to get more revenue in foreign currency. They can't do that. And also, they cannot print foreign currencies. So if you're investing in euro bonds, it comes with a higher risk of default. The risk that an issuer is borrowing in a foreign currency, that an issuer borrowing in a foreign currency would default, is higher than an issuer borrowing in their domestic currency. These are some of the euro bonds and the rate at which they are currently trading. These rates, we pick them as of Friday, April 25th. You have euro bonds issued by Ivory Coast, Senegal, South Africa, Nigeria. Of course, the rates on Nigeria euro bonds have trended upwards lately. It's currently at 10.67% for standard sizes. And then you have bonds issued by Egypt. There are also euro bonds, dollar-denominated bonds issued by corporations in Nigeria like EcoBank Transnational, UBA, Bank of Industry, and the likes. Mostly financial institutions, and then Seplat in the oil and gas sector. Now, coming back to domestic bonds, this is the primary source of borrowing for the Nigerian government. And through the issuance of domestic bonds, the government has issued FGN bonds, Sukuk bonds, which is an ethical bond, and then the FGN savings bond. There are also bonds issued by corporations in Nigeria. Several corporations have issued bonds across the country, and then state governments. So the primary role of bonds in a portfolio is to hedge against inflation. Currently bond yields are close to 20%, and that gives investors some protection against inflation, which is currently at 24.23% as of March. Then portfolio diversification, and then the fact that bonds pay coupons, all bonds pay coupon semi-annually, twice in a year. Then you have retail bonds, that is the FGN savings bond, which pays coupons 4 times in a year, quarterly. So through this, you can get access to streams of income. And then, like I said about euro bonds, if you're investing in domestic bond, sovereign bonds, that is bonds issued by the government, they are tax exempt. So this is what the yield curve currently looks at today. We have these bonds maturing in 2029, 2031, 2033, 2035, all the way to 2053. And you can see what the rates are currently in the market today. Then you come to the short-term instruments where we have treasury bills and commercial papers. Treasury bills are short-term borrowing by the government, typically within 1 year. And what firms, businesses, individuals use treasury bills and commercial papers to do basically is to manage short-term liquidity. The tenure is usually less than 1 year, 1 year or less for treasury bills and commercial papers. So it's a very effective tool for managing liquidity for individuals and businesses. So this is what the yield, the current yields on treasury bills looks like today. And there is a secondary market where all of these are traded. One of the things that we need to talk about is how to optimize returns. Yield is just your effective return when you're investing in these fixed income securities. How do you optimize your returns? And one way you can achieve that can be achieved is through what we call portfolio laddering. And what this implies is investing in several maturities, across several maturities, and then rolling over to higher maturities as the early maturities gets paid off. So You can invest in a 2 years bond, 3 years bond, 5 years, 7 years, 10 years. When the 2-year bond matures, you can now invest in the next 10 years bond. So what layering gives you access to is to enhance your reinvestment income, because it gives you access to a steady stream of cash flows. These bonds have different maturities. They have different coupon payment structure. So there are people who have constructed portfolios whereby they have monies hitting their account almost every month, like it's a salary that hits their account every month, and they get to reinvest this money and enhance their overall return on investment. Then one way you can also optimize your yield is investing across several sectors, different issuers. That reduces your credit risk and reinvestment risk if you invest across different instruments, because what you don't want is to have all your portfolios invested in one sector, and if there's a credit event in that sector, you struggle with whether it's credit risk, the risk that the issuer fails to pay back, or reinvestment risk, the risk that you're getting your money back at a time where interest rate is very low. So it's important to invest across maturities and across different sectors. And then you can also consider implementing a barbell portfolio. We know what a barbell is. What the barbell strategy simply seeks to achieve is to give you access to low rates in the short end of the curve and higher rates, because the assumption is that longer term bonds have higher rates, but they carry higher risk. So in order to neutralize that, you may consider investing in short-term bonds that have lower rates but lower risk. So it gives you short-term liquidity while allowing you to take advantage of higher rates in the long end of the curve. And one beautiful way you can enhance your income when it comes to investing in bonds is to reinvest your coupon when you receive it. That is for those who can afford it. If you can afford to do that, it does magic to any portfolio. When you start reinvesting your coupon, suddenly you see your principal will start to balloon, and then your overall return will start to increase over time. So how do you invest in fixed income securities? There are primary markets and there are secondary market opportunities for investing. So treasury bills are issued every 2 weeks by the debt management office, and bonds are issued on a monthly basis. So typically, the debt management office will publish a calendar at the beginning of every quarter, telling investors the dates where they are coming to the market to issue bonds and treasury bills. So treasury bills typically happen every 2 weeks, and then bonds are issued every month. Incidentally, there was a bond auction today. I've not seen the results. The DMO auction bonds in the 2029 and 2033 maturities today. I think the results should be out now. Probably see later. But if you don't have to wait for the primary market to invest, there's a secondary market that actively trades these bonds. You can buy and sell any time of the day. Of course, work days. So there's a secondary market where you can buy and sell bonds and treasury bills. It's very, very liquid. It trades on the FMDQ OTC platform. So you don't have to wait for the primary markets to make this investment. Sometimes you can even get better rates in the secondary market compared to the primary market. Now, when you invest in bond, the standard settlement is T+2, but because it's an over-the-counter transaction, trades can settle at shorter time frames or longer time frames. It could settle in 3 days or on the same day the trade was done. It depends on what is agreed between the counterparties. and bonds trade between 10:30 in the morning to 2 p.m. on a daily basis. Now, talking about custodians, when you invest in financial assets, there are financial institutions that hold these assets in safekeeping. They are called custodians. So we have domestic custodians and we have global custodians. What the custodian does basically is hold assets on behalf of investors. Part of what they do is settle trades on behalf of investors. So you want to invest in a bond, you open a custodian account, fund that account. When the trade is done, you give instruction to the custodian to settle the trade on your behalf. So basically what they are doing is to pay the seller on your behalf and to collect the instrument on your behalf. So custodian help investors manage credit counterparty risk. The risk that the person you are transacting with would default is almost eliminated if you are running it through a custody account. And through the custodian, you get your coupon payments, they manage corporate action, and periodically, typically every month, custodians will send account statements to their customers. So these are some of the custodians we have in Nigeria. We have Zenith Nominee, First Nominee, Echo Bank Nominee, Stanbic, Access Investor Services Limited, UBA Global Investor Services, FCMB nominees, Citi nominees, FSDH, and Rand Merchant Bank. And then for large institutions and high net worth individuals that invest internationally, global custodians provide additional services of helping investors manage assets across different jurisdictions around the world. So they help with cross-border settlement, currency conversion, safekeeping of international securities, and compliance with international regulations. So some of the local custodians I highlighted are also global custodians. Some of the Nigerian custodians I highlighted, they're also global custodians. But these are some of the other global custodians we have. Euroclear and Clearstream, they are the most popular one. Then JP Morgan, Citibank, and HSBC. Now, overall, when it comes to constructing a balanced portfolio, these are some of the important considerations we need to make. First, establish your objective and your risk limit. I've said it before. Age is also an important consideration when it comes to investing in constructing a portfolio. Age is very, very important. On the average, the older you become, the less risk you should be taking. But there's also a trade-off when it comes to your wealth status. Someone who is a billionaire and is 50 years old may be able to take more risk than a 20-year-old who does not have up to 500,000 in his account. So there's a trade-off between your wealth status and your age. But on the average, for most people, the older you get, the less risk you should be taking. Then you consider your liquidity needs. And then I talked about this before, come up with an asset class. Now, one classical way for constructing portfolios for most people is to do the 60-40 portfolio, which is 60% bonds, 40% bond, 60% stocks. But this is just a classic portfolio. For when you consider some of these factors I've highlighted, how you construct your portfolio may be different from this 60-40 portfolio. And this is what it may look like. If you're a conservative investor, it means that your risk tolerance is low. It means likely that you have high need for cash. Maybe you have a business that needs a lot of cash always, or you have medical needs for a family member that requires money. So you're not going to be investing in very risky assets if that is your case. Then your return expectation needs to be moderate if you're a conservative investor. And then most older people, as I said, are better off investing in conservative portfolios, especially if they have a modest level of wealth. So for such investors, it may be prudent in Nigeria to do 40% Euro bonds, 30% domestic bonds, 10% international equities, 15% treasury bills to give you more liquidity, 5% local equities. So this is just for illustration purpose. Again, I'm not recommending this to anyone, but just to give you an idea of how a conservative investor will be different from a growth-seeking investor. A high growth-seeking investor would have something that looks like this: 40% in international equities compared to 15% in international equities for a conservative portfolio. For a risk-seeking investor, is doing 40% in international equities. Local equities is doing 15%. Treasury bills 5%. Why? Why is treasury bill much lower? Because this person has low liquidity needs. So this is just an approximation of what investing would look like for a growth-seeking investor. Now, today, because of the rise of different alternative assets like real estate, commodities like gold, cryptocurrencies, a lot of people have made adjustments to that 60-40 portfolios. That modification, in most cases, is giving some allocations to these alternative assets like cryptocurrencies, real estate, commodities like gold, and private credit. But a note of warning is that before you add any of these alternative assets to your portfolio, you need to understand what it's going to do in your portfolio. For instance, a lot of people talk about cryptocurrencies today, but you need to also understand that when you're investing in cryptocurrencies, it increases the risk profile of your portfolio, because these are cryptocurrencies have higher risk compared to equities. It increases the risk profile of your portfolio. And for most portfolios, those who can even tolerate it, I won't recommend doing more than 5% allocation to cryptocurrencies. And even when it comes to cryptocurrencies, it's about cryptos like Bitcoin, Ethereum. I'll stick with those mostly, because some of the other altcoins, or whatever they call them, most of them do not have the fundamentals or the historical data to back up investing in them. Bitcoin is about the best performing crypto of all the lot. So if you are considering adding those, you need to talk to someone who is an expert when it comes to cryptocurrencies. I'm not an expert when it comes to cryptocurrencies, so but I know that it increases the risk profile of portfolios. And then you look at gold. Gold has become very popular recently because of the global uncertainties that we face recently. Gold performs well when there are uncertainties. Gold performs very well. But in stable times, gold would underperform some of these other asset classes. And then you look at real estate. Real estate investments are illiquid. It means you can't convert them to cash very easily. So you have to be strategic, very strategic when you're adding real estate to your portfolio. Now, what level of diversification is sufficient when you're constructing a portfolio? You need to be diversified across all of these assets, as I've said, bonds, stocks, alternative assets, that is suitable for you. Then even within stocks and bonds, you need to diversify across several sectors, several issuers when it comes to bond. So if you're investing in stocks, you have to be careful, because today in Nigeria, a lot of portfolios are concentrated in banking stocks. Those investing internationally, most portfolios are concentrated in technology stocks. Because you think of the Magnificent Seven: Amazon, Microsoft, Google, Facebook, Nvidia, they are all technology stocks. And these are the stocks that most people are invested in. So you have to intentionally find a way to diversify across to other sectors like healthcare, consumer staples, and the likes. Also, diversification across geographical regions. And then for retail investors, investing on individual assets may not allow them to achieve optimal diversification. Because imagine someone who is investing with $10,000. You're starting with $10,000. It can barely buy you 5 stocks in the US, for instance. So you may be better off running that through an exchange traded fund. These exchange traded funds, mutual funds, would help you achieve sufficient diversification under professional management. And then, of course, you have the real estate investment trust REITs. They also will allow retail investors get exposure to real estate investments, commercial real estate investments managed by professionals. Then periodically, at least once annually, you need to sit down and review your portfolio. And then when there are deviations from your strategic asset allocation, you consider rebalancing back. Rebalancing simply means one asset class has exceeded the allocation. Let's say international equities has gone from 40 to 50% in your portfolio. How do you bring it back to 40% of your portfolio? It means you now need to sell off some and bring it back to the agreed threshold. When it comes to investing, there are costs that comes with investing. You have brokerage costs, brokerage fees, custody fees charged by custodians. Certain investments attract VAT, capital gain tax, dividend tax, especially if you're investing in the stock market. And then there are implicit costs that arises from delays in decision making and execution. You're supposed to make an investment today. You are dialing, waiting for the best time. There's a cost that comes with that. And one thing you can do to minimize costs is tax loss harvesting. If you determine that an investment is no longer suitable for your portfolio, you can sell that investment at a loss and then use that loss to reduce your personal income tax when it comes to filing with FIRS. We're getting to the end of it, hopefully. And these are some tips that I will close up with. As long as you are not leveraged and forced out of a trade, you can last as long as time. So a lot of people wait for the perfect time before they invest. There's no perfect time to start investing. The best time is as soon as possible. And staying invested is extremely important. A lot of people panic out of trades. There are global uncertainties, trade wars, and all of that. So I'm going to sell and come back later. No, it doesn't work. You are feeding your broker. Because for every time you trade, your broker gets paid brokerage fees. Diversification is important. Pay attention to company fundamentals. Then there's a strategy called dollar cost averaging. Dollar cost averaging simply means that a lot of people talk about buying high and selling low, whether you're investing in bonds, stocks, and all of that. People talk about buying high and selling low. But in practice, you can't buy high and sell low because nobody knows when you are at the bottom and nobody knows where the top is. So it's difficult in practice to buy high and sell low. What you can do is to split your trades and buy at different times throughout the year. When you do that, your average price is lower than the highest possible price, or maybe higher than the lowest possible price. It's called dollar cost averaging. Understand your risk threshold. And finally, very importantly, borrowing to make investment can increase your loss. It can enhance your returns, fine. But when the market goes down and their margin calls, it can magnify your loss a great deal. Finally, Proverbs 13:11 says, dishonest money dwindles away, but whoever gathers money little by little makes it grow. The problem a lot of people have is that they are in a haste to make it. They want investments that will earn them high returns overnight, but the investment world doesn't work that way. You can only grow one step at a time. Thank you.
First question for you, sir. Thank you once again for the very beautiful and insightful session. There are lots of accolades pouring in here. Are there margin loans available for Eurobond investments? Which brokers provide them, and what are the fees involved generally and the LTV? That's the first question. The second says, what are the long-term implications of Trump's tariff policy on the USA sovereign risk for investment purposes? That's another question for you, sir. And then another question says, please, what do you think of dollar-dominated investment funds? I know Stanbic does something like that. There's another question that says, what are the fundamental governing the crypto, given that it's largely an ungoverned space? I think the speaker did give some perspectives. Maybe you can shed some more light on that. Then exactly, okay, this is just a comment. The US is looking to devalue dollar to make their market more competitive against China and emerging global south. How does this play out with those of us with USD investments? Very, very important question. Okay. I'll turn the meeting back to you, sir. Thank you.
Okay, thank you, Brother Oyedele. Starting with the first question, if there are margin loans available for Eurobond investments. A margin loan simply means borrowing to make these investments. For Eurobonds, the primary way you can borrow to make Eurobond investment is basically to approach your bank. But CBN, the central bank, found out at some point that a lot of people were borrowing Naira to go make Eurobond investments. So as a result of that, they came up with a policy that prohibited borrowing to invest in Eurobonds. This was at the height of the devaluation of the Naira. However, they left a caveat that if the Eurobond investment you are borrowing to purchase, if you are taking money to buy Eurobond, you can use a sovereign Eurobond, that is the Eurobonds issued by the Nigerian government. You can use that to collateralize a loan. So they left that caveat. So currently, if you have, this is a technical way of borrowing. Like you already have an Eurobond investment, you can use it to borrow Naira. But I do not think that if you don't have any investment, I don't know of any investment firm that will give you Naira, lend Naira to you to go use to buy an Eurobond investment. It has to be separate transactions. Separate, I mean that you're going somewhere else to borrow Naira, and then you are going to a different institution, convert that Naira to dollar and use it to make Eurobond investment. It has to be separate. If you are doing it in one institution, it's prohibited unless you are investing in an FGN, an Eurobond issued by the Federal Republic of Nigeria. I hope that clarifies it. Then in terms of the long-term implication of the Trump's tariff policy, first of all, we need to understand why Trump came up with all these tariff policies. The simple thing is that the US imports more than they exports. And what has been happening is that the tariff that US charges on imported goods was much more lower than the tariff that the US paid for their exports. So the US was charged more for exporting good than they were charged for importing. And when you do the maths, it creates a deficit that must be financed by either tax or borrowing. And the way the US government has gone about financing their trade deficit is by borrowing. So when Trump was coming in, the debt profile of the US had risen astronomically. So what he was seeking to do is to reduce the debt profile of the US. So on one hand, he's doing a good thing. He's fighting what you may consider a decent cause. But the problem with what he's doing is the fact that the US cannot charge countries more than what countries charge them, because purchasing power is not the same. The US is the only country in the world that has a $30 trillion economy. The US market has a very high purchasing power, and they've got over 300 million people living in the US. Not many countries in the world have that. China is a populous country, but they don't have the level of purchasing power that the US economy has. So there is no time that Nigeria is going to pay more tariff to the US than the US is paying to Nigeria. It cannot happen. So I think, to me, it's a ploy to get something back, at least from these countries, by the US, and to twist a lot of companies operating outside of the US to bring their business into the US. So the final outcome is uncertain. But to me, I don't think it will have any negative long-term impact on the US market. Why? Because the US market remains an important market for many exporters, whether you are an European exporter, an Asian exporter, or someone seeking to export goods from Africa. The US market remains a very important market for everybody in the world. So we cannot wish away the US market. So I see some long-term positives for the US market. But what you need to consider is that there may be structural shifts if this trade wars continues. There may be industries that currently are attractive in the US today that becomes less attractive as a result of the back and forth between US and China. Because at this point, what they're basically fighting for is dominance in the race for artificial intelligence. So there may be sectors that are dependent on China, inputs from China, that will start to struggle if they are based in the US. And there are companies that are in China that depends on input from US that would start to struggle over time. So we may have structural shifts in the economy, in the US market. But long term, in terms of sovereign risk, I don't see so much changes when it comes to these trade wars, especially given the fact that he has left the door open for negotiation. Then talking about dollar-denominated investment, of course, as I did say earlier on, there are great avenues for mitigating the rapid devaluation of Naira that we've seen over the years. But again, before you consider investing in these funds, there are a lot of Eurobond funds, dollar-denominated funds available across several asset managers like Stanbic and the likes. There are a lot of Eurobond funds, but before you invest in these funds, it's important you talk to a professional so they can guide you, because again, I said it comes with its own risk. There's a risk that we could see a default. In 2022, Ghana defaulted on their Eurobond obligation, and a lot of investors lost money as a result of that default. So you need to be speaking to a professional so it helps you match your risk your return expectation, your investment expectation against your risk ability. Then speaking of cryptocurrencies, again, the blockchain technology has become very important and disruptive in our world today. But the underlying investment that gives rise to those cryptocurrencies, many of them do not have very sound fundamentals. Their long-term viability is still in question when you talk about cryptocurrencies. So again, it's a very high risk space. So if you're considering investing in crypto, you need to also consider your risk appetite before getting into it. But as the writer rightly noted, the fundamentals for investing in crypto is, to me, is relatively weak compared to other asset classes out there. Over to you, Mr. Ayodele.
Okay.
Adedeji, sorry.
Thank you so much, sir. I think I see. Okay. Just comments, excellent presentation.